Welcome to vacationlord.com, your source for tools and tips for managing vacation rentals. In this video, we talk about how to file your tax return for your rental property when the property is owned by a company or LLC. This is different in the case where if you're just a regular property owner and you own the property in your own name, you might file under Form Schedule E. But under this scenario, you own a company that owns the property, and you are renting the property for profit. Now, a few other assumptions that we make in this video is that you are doing what is called material participation. Now, for the purposes of the IRS doesn't care whether you have your business in an LLC or whether you own it personally. The key thing in terms of filing your property as a business is your actual activity. You have to act like a business, not just simply own the property in a company. And material participation, what it means is you're conducting your activity as a real estate business and that you are managing it day to day, and you're managing all of the handling all the expenses, getting all the rentals, and you do it to such an extent that it looks like you are running a business. Now we'll get into more details as we get into the video, but that's the starting point for this. We also make a few other assumptions in this video. This is an introductory video. First off, we're assuming that you do not provide extra services, that your business is just renting the property. And secondly, we also assume that you own the property 100% and that you rent it 100% during the year. Let's get started. We talk about how to file your taxes using H&R Block software for rental activity that you are conducting within an LLC or other company structure. Now to get started, we're going to first go to the forms to fill out Schedule C. So let's get started with there. Take me to, and we're going to go down to the income section and go to your own business. Schedule C, go to. Now, for the ease of explanation in this video, I've already pre-filled out a business here. But if you were starting from scratch, you would just simply hit Add Business, and that would get the process started. But I've already filled out all these forms to make the process a little more smoother in this video. So let's get started with this. I'm going to edit this, and first page we get is the name of the company. Here I'm just calling it Rentals Unlimited, and you have an address, assuming this one's in the US, the business description, now the business category. Now, for our purposes, we're assuming all you're doing is rental business for this particular entity. You very well could be doing other business in addition to rentals, but that's not the subject of this video. This video is just discussing the case where your main activity is the rental. So you click Real Estate, and Principal Business Code, we're going to say Real Estate Property Manager, because real estate is our game here. Now, Employer Identification Number, that would be relevant if you've registered with a government entity to perhaps pay employees. In this case, we're assuming there are no registrations necessary, there are no employees. This is an intro video, so we're not going to get into that level of detail here, so we're going to leave that blank. Now, these are some other checkboxes here. We're not going to consider all of these cases. You may want to check this if this is relevant here. You started or acquired it in this year. Cash accounting, that's the simplest method used. Given that we're not really running a business per se, we're just running rental activity, you would say yes to this. That's the most relevant one. Now here's the key question here. Did you materially participate in this business? Now, it is possible to file a tax return using Schedule C where you are not running your rental activity as a business. It could be just like a side job, and you have a day job where you earn most of your income. That's a legitimate case. However, in this video, we are going to assume that you are, in a sense, a full-time property manager, and that is your business. So you would say yes to this question. Now we're going to talk about the business income. Here, if some entity sent you a 1099, you would enter it here. And for this example here, we're assuming there's some marketplace site that obtained rentals on your behalf. They collected the guest payments, filed the taxes, and sent you a check. So you just simply enter the marketplace site, name, the address, the federal ID number, and then the amount of the rent. That's the simplest way to enter this. Okay, so that's, you say yes to that. So if there are more, if there are more places where someone sent you a 1099 miscellaneous, then you would enter them here. Now we're assuming there's no other kind of business, so we're not expecting a 1099-K. Now, tell us your income for receipts and sales. Now this is all other income where no one sent you a 1099. It could be your own website. It could be people personally wrote you checks or paid you on PayPal or some other different payment method where they sent you money for rentals. So we're just going to enter all that other income here in this box. Now this is in terms of agricultural cooperative. This is really not relevant for what we're doing here. Other business income. This is not really relevant here. And now we're not selling anything per se, so this is not relevant. And here's our business income summary. All the income we got from 1099s, and then everything else where we rented outside of 1099. Now, there's a certain set of business deductions we're going to go over. Most of these will be relevant to you, and you have to just sort of judge them based on your own experience. And I would suggest that whenever you do deduct these things, try to collect evidence that you have the expense in case someone questions it. So let's start off with the first one, which is the home office. Now, if you're doing the home office, the easiest way to do this, we're gonna do the easy way for this introductory video, is just take what's called like a standard deduction. Now we're not going to consider startup costs here, so we're going to skip this screen. And then here they're just reiterating, please keep hold of your business records. We just talked about that. Now your home office deduction is the first one. And what you're going to do here is just specify your home office. And of course, you have to really be diligent about this and make sure you actually have a home office. If you don't have a home office or you don't spend a lot of time on paperwork, then you may want to skip this. But we're going to say yes for this purpose. Now we're not running daycare. Say no to that. Okay. So let's say you own your home. So here it is, the simplified deduction. And this deduction is based on it's just a square footage calculation. The square footage of your office divided by the square footage of your home. And that's how the deduction is calculated. So here we are, we'll say 2,400, and let's say your office is 50. Tell us about your home office business income. Keep this simple, we're going to enter 100 here. No, we didn't sell anything. So here we are. Simplified deduction is $5 per square foot, 50 square feet. Your deduction is $250. Now you can, if you use a vehicle for your rental activity, again, you can also do what's called a standard mileage deduction for this. Where, let's say you own the car. Do you have personal mileage records? We suggest you keep those. And here you're just entering your mileage. Total miles driven on the car, miles driven for business, and commuting miles. Now, We're going to claim the standard mileage deduction, and that's really the easiest and best way to do this because we're just assuming for our purposes here, we're assuming that you're using your personal vehicle for your rental activity. And in most cases, that's what people do. So we're going to go with the standard mileage. And the standard mileage deduction includes interest on car loans and personal property taxes. Now, two expenses it does not include are garage rent and tolls. So you will get a deduction for these as well, but you must enter them if you actually incurred those expenses. Again, you'll probably want to check this vehicle available for personal use. That's most likely true of what we're talking about. And you have evidence supporting your deduction. Let's go on to the next item, which is depreciation. Now, all of your property, physical property, not land, can be depreciated. Now, what we're going to discuss only here is depreciating a property. And for our purposes, we're just going to assume there's one property and it's the main property that you're renting, just for demonstration purposes here. So you enter the name of the home, date of service, and you want to be sure to enter residential real estate because we're depreciating real estate. And the business use is 100%. Okay, let's move on. Now here we're going to, you need two numbers to determine depreciation. You need the property basis and the basis for the land. Now the key concept to understand here is the property basis is not simply the price you paid for the property. It also includes your closing costs as well. So if you paid attorney's fees, for example, or documentation fees, title insurance, those are very common costs. So those would be added to your property basis. So be sure to include those. If you use the spreadsheet that comes along with this video and article, it will cover that. It will give you places to put all of those expenses so you don't miss out on them. There we go. There's our depreciation. Straight line, $13,000. Okay. Now, we're going to go through and check off all of these areas where you think you might have expenses. This would cover the most common situations. It very well could be these other ones might be relevant to you. But again, for example, we're assuming you have no employees just for this demonstration here. Advertising, commissions, insurance, professional services, all of these seem fairly relevant for most people. So the first one is advertising expenses. This could include your website. Maybe you have online ads and such things such as that. Commissions and fees. If you paid commissions on your rentals, you paid a third party to obtain rentals for you, and you paid them a commission, you would enter that here. Insurance. This is the most relevant thing for this is your property insurance. Legal and professional expenses. Maybe you paid a lawyer to do a title search. Expenses like that. Let's go on to the next thing. Mortgage interest. That's pretty self-explanatory. Now it doesn't say this here, but points would also, if you paid mortgage points, those would also go into this bucket here as well, even though it doesn't say that. And other business expenses. Now, I'm not going to add any here. This is pretty self-explanatory. If any of these things apply to you, then you may enter them here. Repair and maintenance. Now here I would also include your cleaning expenses. So if you clean the property seasonally or between rentals, you would also enter that here, as well as repair and property maintenance. Supplies, pretty self-explanatory. Supplies used to put into your rental property. Now, taxes, it's quite possible that if use and sales tax are required for renting property in your jurisdiction, you may have to collect them yourself. If that's the case, then you could enter that here. That would be the most prominent case where you would put an entry here. Office utilities, that's pretty self-explanatory, things like electricity and water. And here's the summary right here of all the expenses. And here's the overall summary, the total. Now these are most likely not going to apply in the situation that we're talking about here. And there you go. So this business had a net profit of $80,000. And this, if you go to the forms, you can see where Schedule C is filled out and all the different buckets were filled out. And again, this, if you use the spreadsheet that we include with the associated article on this video, you will get a nice useful spreadsheet that will allow you to fill in all of these ahead of time so that as you're filing your return, you'll have those amounts already summarized and calculated for you to make an ease of entry. So there you go. That's the end of our introductory video on filing your taxes for your vacation rental using Schedule C. If you have any questions or comments, please be sure to enter them below this article, or you can contact us directly using our About Us page. Thank you.